What if the world's safest asset suddenly started acting like the riskiest? The US dollar, the bedrock of global finance, is behaving like a risk asset, and investors are scrambling to understand why. First off, inflation is outpacing expectations. When inflation rises, the dollar loses purchasing power, making it less attractive to hold. Combine that with ultra-low interest rates, and the reward for holding dollars diminishes. Why lock in a low return when inflation is eating away your gains? Next, the Federal Reserve's shifting tone is shaking markets. As the Fed hints at tightening policy or tapering bond purchases, volatility spikes. Traders are repositioning, treating the dollar less like a safety net and more like a gamble. Add geopolitical tensions into the mix, trade wars, conflicts, and political uncertainty, making investors question the dollar's stability. Safe haven currencies like the Swiss franc or yen suddenly look more appealing. Global debt is another heavyweight here. The US carries a mountain of debt, and rising borrowing costs could strain the economy, shaking confidence in the dollar's long-term value. Meanwhile, emerging markets and alternative currencies are gaining ground. Cryptocurrencies and digital assets lure investors chasing higher returns, diverting funds away from traditional safe havens like the dollar. All these forces create a perfect storm where the dollar's behavior flips from risk-free to risk-on. For investors, this means reevaluating portfolios and considering diversification beyond the dollar. So what's next? Watch inflation trends, Fed moves, and geopolitical flashpoints closely. Your financial strategy needs to adapt fast when the world's benchmark currency starts acting like the wild card. The dollar is no longer the automatic safety blanket. It's a complex, evolving beast you need to understand if you want to stay ahead.